This is Jeremy Swing of the Rice Trader, summarizing the February 17th TRT report. As always, it's a great pleasure to be here to spend a little time in the world, to spend a little time in the world rice industry, and just to talk about the key things that we see happening. It is a very, very active week, both in price and in activity. Politics, price, and production, I think, is the term we used in the Rice Trader this week. And there's just a lot going on. If you look at the Rice Trader, we update data on the U.S. We have USDA reports. We have a special on China. I think next week we're actually doing a special on tariffs throughout the world, especially as Trump has now set retroactive tariffs on anybody that's had a tariff on a good. We're retroactively tariff in the same level. This will be a pretty dramatic shift in a lot of world politics. And it could go to a lot of things, including even land. A lot of countries out there that don't allow land purchases while the U.S. does. I would not be surprised at all for any of those countries that don't allow U.S. citizens to buy land to be barred from even land purchases. This is how far and extensive it would go, which is, an interesting point. Do if the U.S. allows foreigners to buy land and own companies, can they not do that in different countries? It's similar thoughts that's going to be going on. And for the rice industry, this is very, very important because you're going to see tariffs on rice trade into the U.S. We do show the imports into the U.S. for the year in the TRT this week. Very, very dramatic, up 7% in the year. Thailand's trading almost 900,000 tons just in the US. That's a huge market, probably their biggest market, depending on how much traded to Indonesia and different areas in the final numbers. And so, very likely the number one market for Thailand is the US. And this will be, instantly, if you think, just call it a million tons times 25% times 500, it is a very, very big number, really, really fast. And so I would expect that to turn some heads, and it's probably not going to slow trade at all because a lot of this is jasmine rice, and it'll be added onto the price and have a little increase the shelves. But it's very fascinating what's happening. And I do a very deep analysis on things Trump is doing this week, along with the other politics. And almost to take a step back, this is in the midst of world prices dropping, as we've been saying, that in February they would very likely be at or below $400 a ton, and that's where they're at. We have Pakistan at 395 this week, Vietnam at 400, Thailand at 415, and India higher than everybody at 425, just because they're exporting so much. And there are some discounts to that too. If you bid 410, you probably get it. You might even bid it at 400 depending on the buyer. So it's a nominally indicated number. But you look, the Indian numbers are they're putting out over nearly 500,000 tons a week. And that's what they need to make the 2.2 million tons that they did in January. Aggressive trade, aggressive G2G talks, aggressive action all around. And that's what I see happening here and everywhere. And so the Philippines continue to be very active. But I would say, if you look at our early numbers, the world trade is down. And large of that is because the Philippines, the biggest buyer in the world, has not really allowed buying of any real sort in January as they work out their tariff or they work out their politics. They're trying to end smuggling. There's been raids. There's just a lot of activity, as we've been saying in the rice trader all year long here. Very, very dangerous market to try to smuggle or try to bring rice in the tariff unpaid or even try to normal trade. I think a lot of people, there's been articles where the Vietnamese, there's 250,000 tons just waiting to ship that's not shipping to the Philippines. Just fear and renegotiation as the price drops. And it's just a lot going on. And as we said, we are trying to help the world be a better place in the major grains. There is very little reneging on contracts. In rice, there is renegotiation, reneging, a lot of activity that we all hope will end someday soon. So again, as we go through this, I think the Philippines, India, China, Indonesia are probably the keys, and the U.S. the keys to the world market right now. With the politics of the U.S. and Trump, he's looking to end the Ukrainian war. He's looking to, again, these tariffs. He's been very aggressive with Mexico and Canada. He's going to be very aggressive on ending the Ukrainian war and forcing Europe to be a larger funder of NATO. As I say in there, you expect Trump to lead because he's going to. He met with, of course, the Indian Prime Minister Modi this week. Talks with Saudi Arabia, talks with many, many world players, including Putin, to try to end the Ukrainian conflict, Zelensky to end the Ukrainian conflict, Israel, of course, to continue that that process of peace in the Middle East. And again, you have to look at this as very, very price negative to rice and the commodities. As Ukraine becomes free and the flow is clear, the Black Sea area becomes very open up. You'll see production rebound, it's a trade rebound significantly, and that's what we'd expect. There has been, of course, a reduction in some of the production places, but world commodities is extremely high. We go through this. Rice is still at a 34% stock to use. Wheat is at 32. The only one even decent is corn, which is at 22, and that's really in balance. And you're going to see a tremendous amount of corn acres based upon the price right now, and that will definitely add to the world stocks and make trade very, very easy in the coming period, is my guess. You'll probably even see some rice being fed to a point to take down some of their very, very high stocks. So a very complicated market. Philippines holding trade out. The Indonesia is not buying. China is buying very little. In fact, net exporter in 2024, perhaps in 2025. Players are looking for demand everywhere. There's a lot of weakness in the market. And again, this is what you expect in a bearish market. Players start to have a very difficult time, other than India, who sold a tremendous amount cheap and fast and quick. But you see it in Pakistan; they just aren't booking anything in. Nobody would buy it 415. Nobody buy it 410. Now at 395, they'll probably book in quite a bit of quantity. But they're at the tail end as well. Their crop was not as big as most people thought. They probably have 2 months more, maybe 2.5 more months of trade, and they do have quite a few shipments that went into the Philippines. If you look at the data, which is it's a boom to them. But it's not that much quantity at all as we move forward. So a very, very key time on the trade, key time as we're moving forward. And I would just say that you have to watch the market. I can't really summarize the massive in-depth talks that our team puts together between India and Pakistan and Thailand, Vietnam, and US, whose prices are still about 725, with the South American crop about ready to come on and taking over the region at 600. And again, Asian rice should be being flooded into the region, but it's not at all being sold in the middle Americas type level. Even at a 25% tariff, let's say you have $400 rice, $500, 550 with the landed FOB or landed cost of some container freight. Yeah, 550 versus 725. I mean, it's a killing for anybody you could put it in a bag and sell it. Amazing, amazing trades. People should be making millions and millions of dollars on that transaction alone, even paying the 25% type tariff. So anyway, a very active market. We go very in depth in the rice trade this week. There's so much happening, so much going on. I do suggest you look at the USD numbers very, very closely. You look at the stock to use ratios. You watch the prices. You look at all the points we're making about where the flows are happening, where the weakness is. I think a lot of the origins are going to find a very tough time right now. And I think a lot of buyers in the Philippines, as we've been saying, it's extremely dangerous. Red flag. I mean, I call it the red flag issues, along with, trying to end some of this dishonesty where, Philippine trade has thought to have lost 50 to 100 million in the last year on tariff trades and renegotiation. There's been so many of these issues, that these red flag issues, the trade in the Philippines just being very reluctant to buy anything with unknown tariff and elections happening and a lot going on. So with that, I think it's a good time to end. I could go on forever. It's a fascinating market, so much happening, so much that we've called right, that really there should be a line. Those who've watched what we've said, where we think things are going to happen, where the risk was, have really prospered. And those who have not are, in my view, very much suffering with just different views that did not hold true. So with that, I wish all of our clients the best. I look forward to seeing you. I'll probably be in Asia in 3 weeks just to see some of our clients and enjoy some time there as we set up the World Rice Conference. With that, this is Jeremy Winger signing out. Look forward to talking to you next week.